you've been watching stocks or crypto, crypto doubled pretty much in the last week. Stock earnings, there are stocks right now, they're trading at 37 times earnings, very reminiscent of 2000 and 2001, the dot-com bubble. We're going to be talking about that. Trump appointed his HUD appointment. We're going to break that one down for you. That's going to impact real estate a little bit. And we're also going to be talking about the important corner that we're turning in multifamily right now. Rent demand is soaring across the United States. So Nate and I have been talking about this for about a year. What was going to happen as single family felt the squeeze. People had to move out of their single family. We've seen foreclosures go up, and they're all looking to rent because renting is so much cheaper than buying right now. What does this mean for investors, though? We've got a lot to cover on today's show. Chris, I'm going to bring you up. Are you excited?
Um, Dude, I'm excited about the future. It looks so bright. I'm gonna have to put on some sunglasses.
If you showed up in sunglasses, that would be pretty awesome. We actually have a new offer that we're going to be talking about as well. It's something special that we put together. A lot of people have been asking for as we get towards the end of the year. It has to do with great returns as well as a 50% tax write-off. We're going to be breaking that one down for you. Before we jump into all this, though, this is Home Invest. We are a Christian-based company. If you're new to us or our world, we are based on Matthew 25. That is the principle of the talents. We are here to help you be great stewards of what God has given you. And we are going to start things off with a quick word of prayer. I'm going to take my hat off, bow my head. If you guys don't want to join us, that is okay. We're still here to bless you. Dear God, we come before you on this Tuesday. Please be with us as Chris and I share from the news as well as our new offering. God, please help people to hear what they need, help them to feel empowered, and help them to be able to cut through the noise and get what they need to build generational wealth for them and their families. In your name we pray. Amen.
Amen.
All right. So we're going to jump right in with this new opportunity. So this opportunity that we have for you, a lot of people have been coming to us. They're saying, we're getting towards the end of the year. We're looking at our taxes. We need a tax break. And we see that you guys have this phenomenal deal where it's basically an infinite investing deal. You're going to put in your money, you're going to give it back to the investors in 2 years, and you're going to keep us in the deal. How do we take advantage of both of these? Well, Chris, I'm going to throw the ball over to you and let you start talking about it. I'll pull up the OMs as you are talking.
Beautiful. So, as we approach the end of the year, people are looking at what their tax liabilities are, yada yada yada, what cash they have available to them, and how they're going to go into the new year with the most benefit for themselves and let's face it, their checkbook. So we have these two great deals. One is Del City, or Oklahoma City, as everybody knows about. And the fantastic thing about Oklahoma City, it's one of those deals that happens like 1 in 50, maybe if we're lucky, deals. And what I mean by that is Mortgage Terrace. This is the Del City, Oklahoma property I'm discussing. What has happened with this property is that we're getting it at such an amazing discount that we fully predict that within 2 years, we're going to be able to almost double the value of this property without issue. So with that being said, the cash flow out of this property is great, but that's not the biggest attraction to this deal. The biggest attraction to this deal is it's an infinite deal. What do we mean by that? So because we believe based on what's going on in the area, based on the number of jobs, based on the population increase, which is 1% by year, which puts it in the top 10 for the country, by the way. It's increasing 1% per year. The demand for apartments in this area is going to go up. When the demand goes up, prices go up. So as the market rents rise, the NOI rises, and then the value of that property rises. So if you look at the numbers that Steve has got up right in front of you right there, right now they're renting at $1.08 per square foot, and this should be right around $1.35 per square foot. So just based on that, you can see that we're going to get a significant increase on the first turn of leases on this property. So what's going to happen is within 24 months, we're going to do a refinance on this deal. And listen to this. We're going to give you 90% of your capital back. So during the first refinance, you get 90% of your capital back but you still maintain your position in this property. So even though you have all your capital back and it's been returned to you, we're going to keep paying you. We're going to keep paying you and keep paying you until we exit this property, which the reality is hopefully never, right? So as long as the market keeps going up and as long as the NOI keeps increasing, we'll hang on to this property and pay you forever. So the primary attraction of this deal is cash flow and longevity of this deal with regards to paybacks and your returns. Now, that's a great deal, but this is the did I just want to say, but there's more, right? That's a wonderful deal. But the reality is we also have this other asset, which is a little bit different. So this other asset we have called PTP or Pine Tree Path. It's a 4-year business plan, 4 to 5 year business plan. So on this property, it doesn't have the glitz and the glimmer that we have on the other ones with regards to the numbers. This property has a slow and gradual increase over the next 4 years. We're putting some money into it, bringing it up, cleaning it up, doing some rent turns. But this guy, the problem with it is it's 100% occupied. And you notice I said the word problem with it. What happens is when you have a property that's 100% occupied, that means your rents are way too low. So this one should be renting at $1.57 a square foot and is currently renting at $1.19 a square foot. So we're going to slowly but gradually, because of the lease structure, turn these over and get them up to market rents. And this one is a predictable IRR up to 22%. So that means if you stay in the deal for 4 years, you get about 80% of return on your money. Stay in the deal 5 years and you get 100% or double your money. But the biggest draw to this, because it's one of those slow, predictable deals that give consistent payout, is the tax benefits. So here we are at the end of the year, we have this great deal that's got all these tax benefits, and you want to maximize or minimize, maximize your position and minimize your payout to the US government or the IRS. So what do? Do you sink all your money into an asset that's slow growth and predictable outcome, good returns, great deal as it stands for itself? Or do you go for the deal that's got all the pizzazz? What we're doing is we're doing this. So we have come to the conclusion, based on the numbers, that if you want a mix of the two, we're going to offer that to you. So what does that mean? So if you commit to investing in both, minimum of $100,000, let's say you put, or let's just use $200,000 for easy math. If you put $200,000 into this deal, $100,000 in Pine Tree Path, $100,000 into Del City or Morgan Terrace, we're going to get you 50% return on your dollar between the two for depreciated loss on the K1. So the first year, if you put in $200,000, 100 in each, you'll get $100,000 in your depreciation loss on your K1 that you can write off your taxes. So, we're always looking for the best deal for everybody. We came to a place with this property. We realized that as GPs, we have enough tax benefits for this year. So we're giving away our tax benefits to make it so that on both of these properties, so that we can make this deal happen for anybody. So if you guys have any interest in this and any interest in having both your cake and you get to eat it too, I recommend you make a call, book a call with Susan or Steven, and let's get you on the phone and we can go dive deeper a little bit into this deal and get you the necessary details. Whew, I can breathe now.
You did amazing, Chris. Just to highlight this, what this is, if you come in for our minimum 100,000, we are going to put you in both deals so that you get both benefits. You will have a infinite return play and you will get amazing tax savings as well. So if you need a good tax break towards the end of the year, which we've had a lot of people say that they do, this gives you both. It is the best of both worlds. We want to honor you guys and take care of you. Sue has put the link in the chat. You can click on that link. You can book either with me or with Sue. This is for accredited investors. What that means is you make more than $200,000 a year singly, $300,000 a year jointly, or you have more than $1 million in net assets, not including your primary residence. Those are the government's rules, not our rules, but we do have to play by them. So this is for accredited investors. You can click on the link. That will get you on a call with myself or Sue. All right.
I'd like to just add one quick thing. If you choose to be in just one deal, you're welcome to do that too.
Absolutely. If you do want just one or the other, we can definitely honor that as well. But we've had a lot of people ask if there was a way to do both, so we wanted to offer that to you. All right, that is going to move us into the news. As always, man, there is so much going on. I feel like post-election, Chris, there's always stuff that just gets going. So the first one, I'm actually really interested to what you are going to say about this one, Chris. So this one is about the stock market. If you have some money in stocks, or if you watch the stock market, you notice that things have been going up, up quite a bit since the election. I have a little bit in crypto. I don't have a ton in there, but I do like to play. So I have a little bit in crypto, and it's basically doubled. A month ago, it was at 52,000. Last week, it hit 100K. So really, really good returns. But what goes up must come down, right? So here they're talking about the stock market feels a
Steve,
lot
your
like.
audio is really bad.
Thank you. I will fix that. We'll see why.
Hey,
Thanks, Sue.
Yeah.
Chris, I'll let you take over for a second. I'll look at my audio.
All right. Sure. So everybody's afraid, as the stock market's going through the roof, everybody's starting to get concerned about that, Y2K look, is the stock market going to collapse again? What's going to happen? So I don't know, the thoughts of the crypto going to the roof and all of these things making the economy unstable. What I'm afraid of is that investors are going to pull back and it's going to cause another crash. So we're bouncing that idea around, seeing what's going on with that. But definitely post-election, companies are trading at 37 times earnings. That's nuts. And it's going to hit 38 real soon. But then let's not forget, last time this happened, the market immediately pulled back by 25%. So we're optimistic, or pessimistically optimistic about what's going on in the market. So paranoid optimism is what I like to call it. We're very optimistic, but we're looking to make sure that things don't go crazy. I've got very little cash in the market as far as a total percentage of my portfolio, but I'm happy right now. But you gotta have those sell orders in just in case. You back with us, Steve?
I think so. You tell me. Is my mic
You are.
better or worse?
You are better.
Okay, cool. I'm not sure exactly what that was. I apologize, guys. I mean, my thoughts on this, I do think it is definitely going to come back down pretty quickly. I think it's a bump. My thoughts, I actually talked to an investor who said, I was thinking about putting it in real estate. I said, well, here's the thing. We know the real estate is going to give you the tax break. We know that the real estate is going to give you a solid internal rate of return. Historically, we are at over 22% at Home Invest. And we tend to usually under promise and over deliver. If you look at, we are very, very conservative. And I said, so why not take something that's a sure thing, unless you're just looking for a dopamine hit? Maybe keep a little bit of money in the stock market, but I would put it in real estate. Like, we've seen the big bump, we've seen the big bounce up. Pull the money out, stay safe, maybe keep a little bit in if you want to play. I mean, this is what I did with my crypto. I pulled 80% of it back in cash. I think it's going to hover around 100K for a little bit, and I think it's going to drop the same way it did. It hit its all-time high back when Elon Musk invested about 2 years ago. It hit 72K, and then it fell off and it went down to 19. I think we're going to see similar stuff. I think it is really interesting. The economy definitely believes in Trump, which is, not a bad thing. I think that's good. We want to see them. We want to see the economy. We want to see people believe in the economy. And that's what we're seeing. The next news article, speaking of Trump, Trump named his pick for HUD secretary. There's been a little bit of mixed reviews on this one. Chris, I don't know if you read any of this or if you had time to look over it.
I haven't had time yet today. No.
So he picked a guy that's from Texas. Gotta love that. a leading Texas-based multifamily housing developer since 2023. I thought that was pretty funny. So he's
It's
been
pretty
leading
awesome.
for a year. But he does have a lot of experience in housing. He also works with underprivileged housing quite a bit. And his first big focus is going to be housing affordability. It's going to be interesting to see how this plays out because Trump, in his pre-election, didn't really talk a lot about any of the stuff that Harris was talking about at all. Harris was talking about, we need to lean in, we need to really fix housing pricing, we need to make sure that affordable housing there. And Trump is just saying, hey, let's pour gas onto the economy and get the economy going so that people can afford great houses. I tried to find any kind of interviews or anything that I could pull up about this. And couldn't really find all that much. I was trying to figure out why Trump picked him. Chris, any thoughts?
No, but other than maybe he's a Redskins fan, I don't know.
It's interesting.
I really don't know, but I like the fact that this guy is coming in and has a vested interest in multifamily, right? That may be a conflict for his position, or some may perceive it as a conflict for his position. But the reality is that I'm a multifamily investor, and he's going to be pulling on Trump to go back to the job and tax cut acts
Mhm.
to maybe get that back to 100%. For 2025 or 2026. And so it makes me very excited because this is a guy that's doing what we're doing. So he will look out for his own best interests, and when he does, it'll help us.
I would agree with that. The other piece that I thought was worth highlighting here, during Trump's first run in office, he was cutting the budgets for all kinds of stuff. He was trying to cut the HUD budget, but it
Yeah.
was blocked. This time, I think he would have an easier time doing that. And I think naming somebody that has multifamily, when you were talking, Chris, I agree. His interests are aligned with our interests, which honestly are aligned with the nation's interests.
Yeah.
It'll be interesting to see what happens. I think he's picking somebody that normally wouldn't be looked at, which also speaks to he's trying to break up the like monopoly that has been there. I'm still interested to see what Elon Musk is able to get done with cutting back on government spending and government agencies. All right, our next topic. Here we go. Multi-demand is soaring. So right now we have seen multifamily demand. We've seen wait lists go up at apartments around the country. I know Austin, the luxury market in Austin is still suffering. There's still some vacancies there, but they've dropped the prices. There was one place that was offering 4 months free with a year lease in luxury apartments, which I thought was pretty crazy. But the C-class stuff, the stuff that is mid-range, good, safe, affordable housing has a wait list right now. So this article shared a couple different things that were great. The first thing is that we have seen the market 50% above last year's total. That's the demand. So you know that there are a lot of people out there looking for places to live. They say in this article it's a mix of factors, and they kind of break it down. They like when they're talking about the demand growing, this is what Nate and I have been talking about. As single family feels the crunch, as the recession tightens, as there's less money and inflation still stays high, people are going to be looking for ways to save money, and that leads to them wanting to jump into rental housing. The thing is that there's not enough there. The next article that we have up for you is, let me pull it
I
up.
almost wish you would have done that one first.
This one first?
Yeah.
We can go with this one if you want.
Yeah, I mean that one before the other one, and just show the contrast. So go ahead and hit the highlights on this.
Yeah, so this comes from the Builders Association. So
Yep.
builders still do not believe that they have the proper means to build profitably. So they're pulling back. they're not building. And when they're not building, that just creates the pressure over here because demand is soaring. And if that happens, what does that mean? That means that our buildings, the ones that we're invested in, are going to grow faster and faster. The value is going to go up because values of apartment buildings are based on the like how much you charge for rent, the NOI. So if we go with this one first, if we talk about this one, we can't do it first, but the builders right now, because of the cost of goods, because of the debt rate that they're getting, they don't believe that they can profitably build. So they don't have confidence in building multifamily.
Right.
That's
The
just
risk is too high.
Yeah, that's just feeding the fire over here of people wanting to rent. So if you think about that, what happens to all the apartment buildings out there? They all go up in value because when there's more demand and less inventory, it goes up. What's going to stop the building from happening, though, if price of materials stays high, which it's going to, inflation actually ticked up. Chris, I don't know if you saw that last week.
Yeah.
Inflation is ticking up. And I'm not an economics professor, but when inflation starts to tick up, we talked about this on last week's show, right? They're not going to lower the rate. Or sorry.
No, you're right. The rate.
Yeah. When the rates stay the same, builders are not going to go out and build because it's too risky for them to build, which means we're going to keep seeing prices go up. What this really means for all of you guys.
Real quick.
Yeah, go ahead, Chris.
So yeah, there's the cost of the money to build these things, and then there's the cost of the materials. Both of them are going up. So what happens is, to build the multifamily, you would have to drive the rents up so significantly that the risk for the rate of return for these guys it's too scary. They can go into other places like single family and other stuff where there's less risk for investment on their part, which makes our properties and the stuff that we hold currently that much more valuable. That's why, if you've been paying attention, Nate's been talking about the bounce, right? We're at the bottom of the bounce and we're climbing back up about the values of multifamily. That's because we're going to be able to raise rents and drive the NOI up, and they're going to become more and more scarce. But that makes everything you hold more valuable, and it allows us, because of the rate issue, to go out and be selective and pick more deals in the future. So we're not being handcuffed by this. We're just having to be really smart and diligent.
That's so the deals that we have on the table right now are great deals, and they are only going to go up more in value from what is happening. If you guys are in one of our deals, that means that we're probably going to beat our returns. The new deals that we have on the table, we underwrited at terms that are now, like, as this goes up, our returns are just going to get better. What does this mean for the average person? The average person that wants to live in a rental is going to they're not going to pay a premium, because at the end of the day, fair markets do balance out. We're not beating anybody up. It just means that they're not building. The last piece that I want to touch on that kind of brings this whole pie together. We're baking a pie on Thanksgiving week, Chris. Who would have thought? I don't know if you're any good at baking.
Good eating.
The last piece is, Nate and I have been talking for a while, and Chris as well, about the distress in multifamily. Well, it looks like we have turned that corner. The distress signals are starting to die off, because what happened is all the people that took the bridge loans during 2020, 2021 that weren't hitting their exits, those deals are getting fewer and farther between. We've taken down 2 this year, and we're working with the third one right now, is the one in Oklahoma City. But these are getting harder and harder to find because companies came in and they scooped them up. The market has absorbed them, and now we've turned the corner. So what this article talks about is basically, at the end of third quarter of 2024, more than 14.2 billion in apartment value was distressed, but that is a decrease of 124 million compared to the end of second quarter. It means that there's less distressed properties, and we're going to see less distressed properties. There's still a few out there. The one that we have right now that is offering the infinite return is based on this because we got something that was distressed. The one that we took down in Memphis, also because it was distressed. But this is going to get fewer and fewer. That doesn't mean there aren't going to be good deals out there, but there's just going to be fewer of them. We are starting to turn the corner. Nate talked about this. If you remember the graph that he put up that had the bounce, we are on the uptick. And I just wanted to show you that now, mainstream media is starting to catch on to that as well. Chris, any comments on this?
Nope, you nailed it, Bubba.
Cool. So there you have it, guys. That's kind of everything that we've got is pointing to multifamily is going to continue going up in value. Deals that are great deals are going to be fewer and farther between, but they're still out there. Home Invest, our job here is to bring those deals to you. That's why we do this. Whether you invest with us, whether you invest with somebody else, we want to make sure that you have the knowledge that you need to make great investments. Chris, I'm going to throw you the ball to give us the highlights of the deals one more time. We're giving you a combo deal today. You can't invest in either one of them singularly, if I can speak.
Easy for you to say.
Chris, go ahead.
Sure, but before I do, somebody had raised their hand and I didn't catch it in time. So whoever that was with put up their phone number, please, please, please click on the link, get with Sue, get with Steve right away. So real quick, a Morgan Terrace deal, which is in Del City, Oklahoma, which is for all intent and purposes, is Oklahoma City, Oklahoma. It's a great deal, great cash flow, great value. We got a great valuation right next to Tinker Air Force Base, and they're investing huge. Pratt & Whitney's investing huge in Tinker Air Force Base, bringing another 3,200 jobs into the area, driving rents up. That's our infinite return deal within 24 months. That's our intention to get you 90% of your cash back, but keep you in the deal so that you keep getting dividends. It's not the best for tax savings, but it's solid. It's there. And then there's our other deal, which is Pine Tree Path, another solid deal with steady growth, with our typical business plan, which is to hold for 4 years, to roll it out in 5 and dispose of it through sale. But that deal has got great tax savings on it, so you'll be able to get a significant bounce on your taxes through depreciated losses on your K1. And what we're doing is we're doing that blended deal where we're putting the two of them together so that we can get you 50% in depreciated losses in the first year on the investment that you put into the both of them. Either deal can be invested into individually, whatever is to your benefit or your liking. But we're recommending right now to get both. That way you get the tax savings to close out the year. And these are the last deals we're going to get under the wire, I think, before the year in the multifamily space. So man, please, and these are going fast. Like these are going really, really fast. So please, 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 if you're interested, click on the link that Sue's posted and reach out and talk to somebody.
Awesome. Sue has posted the link in the chat that will get you on either with her or with me. My calendar is pretty full. Sue will be happy to talk to you. We can also do IRA rollovers, and you can invest through your retirement accounts. We can walk you through what that looks like. If you have money that is sitting around, if you're looking for a tax break, reach out to us. We would love to chat with you. If you have any questions, let us know. And that's going to do it for the Opportunity Zone. Oh, go ahead, Chris.
If you're watching this live on social media and you don't see the link or anything, please, please, please comment invest, and one of our team will reach out to you.
Yep. If you put the word invest in the chat, that will let our team know, and we will get you on a call with us. Wish you guys an amazing Thanksgiving week. Enjoy the time with your family, eat some turkey, be healthy, be safe out there, and we will see you next Tuesday with the latest in real estate news here on the Opportunity Zone. When we close this down, the links will go away. I'm going to leave the room open for a little bit. Click on one of those links, book a call with us, and we will see you here next Tuesday. Have a great week, guys.